And now, ladies and gentlemen, we would be proceeding on to our next session on being future-ready India at 100 in just about a couple of minutes while we set the stage up. So we welcome you all now to the third session for the day 4 today on being future-ready India at 100. In this session, we will be talking about notwithstanding the probability of setbacks. India's growth story presents a resilient outlook, and this session is going to focus on the areas that businesses must keep in mind to be future-ready. To deliberate further on this theme for the day now, may I now take this opportunity to invite our respected CA Amarjit Chopra, sir, past president, ICAI. Let's give a big round of applause, everyone, to welcome him on the stage right here. Let's continue with the applause right here to welcome sir on stage. Thank you so much for your gracious presence, sir. And now I will take this opportunity to invite our honorable guest for the day, Mr. Deepak Parekh, Chairman, Housing Development Finance Corporation, Mumbai. Let's give a big round of applause, please. Thank you so much, sir, with your honorable presence here for the day today. May I now request at the onset, respected CA Amarjit Chopra, sir, past president, ICAI, to kindly address the session.
The honorable speaker of the day of this session, Mr. Deepak Parekh, the president and vice president of the institute, the past presidents, the council members, distinguished delegates from India and abroad in particular. I think it's a great privilege to be with you this morning and to speak on a very, very important topic of future readiness for businesses of India at 100. I think this is a topic which is very close to one's heart, and particularly post-COVID, post-pandemic, whatever we have seen, 2 years, when the world over, and in India also, we had a lot of setbacks. Various segments, various sectors had suffered very vastly, whether it was hospitality sector, aviation sector, or other sectors. But we have bounced back. World may be still limping, but India's story is absolutely different. We are still growing at a rate of more than 6%, And I think this is a big tribute to Indian growth, to Indian resilience for that particular matter. And when I think in the last 5 days, or in the last 3 days, we have heard one word, VUCA, number of times, and it says volatility, uncertainty, complexity, ambiguity. I think post-COVID, everything arose. And even earlier, this was there. It is not that it was not there earlier. But post-pandemic, if one has to predict India at 100 and what will be the challenges to be faced by Indian businesses, I think it will require some astrologers, some kind of predictions to go through, and most of astrologers have gone absolutely haywire during the COVID also. Most of the astrologers were saying this will go away in June, somebody will say it will go away in October, but each one of them failed basically. But I think with Mr. Deepak Parekh being around, I think we'll have sound predictions, there is no doubt in my mind. But one thing that I will like to say is that I will like to divide whatever brief address is concerned, particularly on 2 or 3 very key issues. If we talk of Indian businesses, I think one of the most important talks would be with regard to the ethical practices also. I think without ethics, no business is going to survive. There is going to be no sustainability under any circumstances. And whatever we have seen in the last decade, if there are further goof-ups, probably there could be more regulatory measures. There could be more tightening of the regulations for that particular matter. We all have been talking of ease of doing business. But if there are further goof-ups, the kind of NPA levels that we have reached in the banking industry, and some of the banks had staggering percentages of NPAs at 20% or 30%, I think it will require further tightening up of the various measures. I wish that it does happen in the times to come. There's no doubt in my mind that businesses will take all those things in stride. And so far as the business risks are concerned, complexities of the business are concerned, I will say the nature of the business has undergone a change in the last 1 decade particularly, and the further decades are going to change it further. We used to have the tangible assets, we have totally intangible assets. Look at the way the businesses are being done. Look at the way the valuations have been given to the various startups. Rightly or wrongly, I'm not getting into that particular part, but I think that's one of the biggest challenges to me. What kind of valuations are being attached to the various startups or the various businesses, and the way the stakeholders have suffered at the hands. And I think it is the role of the other regulators like SEBI, etc., which should come into play. Someone may be able to say that why a regulator, capital market regulator, should get into the valuation. But I think if the regulator has to take the responsibility of the valuation also, why not? If you allow a particular issue to come at a particular price, after all, in the control of earlier CCI regime, the valuation used to be one of the responsibilities there. And I personally feel that here also, SEBI should be able to take some responsibility. You can have 3 different approaches to the valuation, and one of those valuations could be different. So businesses, to my mind, should be ready that somewhere or the other in the times to come, probably the SEBI may have to assume the responsibility for the valuations also, if nothing else. I think we have gone into the all intangible assets, and this is making the life more difficult. It is making the valuations more difficult. It is bringing the standards of impairment, implementation, in a greater difficulty, basically, if you really ask me. So my humble submission will be that when we talk in the business, when we talk of the digital assets, when we talk of the intangibles, in that particular case, and in the times to come, I think one of the challenges that the businesses will face will be with regard to the digital assets. We talked of the cryptocurrencies, etc. The way the digital assets are being created on the balance sheets, the way these are to be treated, the way these are to be accounted for, the way they are to be impaired, I think that will be one of the bigger challenges in the times to come. Sir, to my mind, I personally feel the Indian businesses, if we are trying to talk of India at 100, the most important issue will be of the governance. I think the way we have been governed in these times, that type of governance cannot continue for a longer time. And I think this is challenging the sustainability of the various businesses. The board members, if the board members themselves, if the audit committee chairman does not know what the accounting standards are, he does not know about the valuations, he does not know something about the others, I don't think that it really talks well of the governance. If the risk management committees, the risk mitigation committees of the various companies do not meet for 3 years, that's not the kind of governance that we are expecting. So to my mind, business has to be prepared for it, that whatever committees we constitute, particularly the role of the audit committee, the role of the risk management committee, these are going to be much greater. And probably, I will like to say here one thing more. If we goof up further now, I think the promoters should be ready that his role to appoint the independent directors, his role to appoint the auditors is going to be serious is going to be challenged very seriously in the times to come. Probably the appointment of the directors, the appointment of the auditors could be in the hands of someone else in the times to come if the governance issues continues to persist in all these directions. And I think when I talk of the governance, I have also always maintained that there are few pillars of the governance, and auditors are also a pillar of the governance for that matter. And the auditors will have to play their role. And if the auditors don't play their role, I think then also, so what I am trying to say is when I talk of business to be ready, the promoters should be ready for more, you can say, the kind of auditors who are going to challenge the promoters more and more in the times to come. Because the way the regulatory mechanism, the way the regulatory measures have come with regard to the auditors also, I don't think that any auditor will be able to take the things the way these have been taken in the past at some point of time. I think the auditors are also under great stress. The auditors are also going to feel more responsible. The auditors are going to feel more pressure in the times to come. So I think the promoters will be challenged with regard to their assumptions, with regard to their presumptions. And I think whatever Mr. Ajay Bhushan Pandey said that day, I think it is for the auditors now to say to the audit committee that I am not here to assess the risk. Please tell us what do you want from us with regard to the various risk areas. And I think this is what the businesses will have to do in the times to come, if not today, probably tomorrow. The regulatory mechanism, the regulatory environment has already undergone a change, whether it is SEBI, whether it is Ministry of Corporate Affairs, or whether it is Reserve Bank of India. And in the times to come, whether these are direct taxes or indirect taxes, I think the kind of data which the government is able to create today, there will be more pressure on the businesses to really set their house in order. And if they don't set their house in order, there will be certain other serious challenges so far as that particular part is concerned. And to my mind, when I talk of governance and when I talk of regulatory activism, to my mind, one of the area which will be under great scrutiny in the times to come will be the related party transactions. Whether the regulators do it, auditors do it, the promoters themselves do it, but these are the kind of transactions which the promoters will have to really make sure that these are at arm's length under all circumstances. And another thing that I would like to say is the transactions in the nature of the money laundering, particularly through the layered, you can say, schemes. We have seen now in various companies where the money has been siphoned off or money has been laundered through various multi-layered schemes. I think that is also the promoters are going to face the heat so far as that particular part is concerned. And another thing that I would like to say is that probably there will be more changes. Of course, Chitle Saab said that standards should not change too frequently. If the things continue to change in that particular direction, we will have more changes in the accounting standards, the auditing standards. The way we have interpreted SA 240 today with regard to frauds, I think this will require a very serious thought process whether we need to change it or we want to continue in that particular manner. Technological changes in any case are going to impact the business. There is no doubt in my mind. This will need upgrading of the skills of the staff, everybody. And also at the same time, there will be a need to change the curriculum in the professional institute. There will be a need to change the curriculum at the universities to upgrade the technological skills of the people. Data and device security is going to be another important challenge so far as the businesses are concerned, because so far as that particular part is concerned, the way IoT, etc. are coming, I think there is going to be more threats so far as the cyber security is concerned, and we'll have to look at that particular part. Interest rates and currency risks are going to attract the attention of the promoters far more than what these have been attracting world over. For that particular matter, whether it is Canada or US or India, the rates of interest are going up, and I think this is one challenge that the promoters would face. Inflation. In India, we are still able to control it to some extent, but I think world over, if you look, you go to Canada, you go to US, you go to UK, you go to Germany, anywhere else, I think the inflation is under, it's spiraling basically, and I think we need to look at that particular part because it reduces the purchasing power of the party. To me, there are two great threats, and these are the two issues that the promoters will have to address. One is the inequalities of income and wealth. When I talk of inequalities of income and wealth, today the statistics are very clear that 10% of the people own 77% of the wealth of the nation, basically. And in 2017, 1% of the population could have about 70% of the total wealth. And 50% of the population's wealth increased only by 1%. I think this is a big challenge, and because that will be basically that we'll have to consider. And of course, one can go on, and sustainability is one of the challenges, there is no doubt. Ethical issues are one of the another challenge which I talked to begin with. I will like to end up on one note. Of course, I can go on, but I will like to end up on one note. Savior of the situation. This is something that I will like to put on record here. The savior of the situation in the times to come will be, again, I will be using the word VUCA only, but VUCA will be changed. I am going to change the VUCA altogether different. I will say it will be versatile, absolutely unique, candid, upright accountant, basically. It will be the accountants who are upright, who are candid, and who are absolutely versatile, who will be able to come to the rescue of the various businesses in India, for that matter, and they will be able to prepare India at 200, at India 100. Thank you very much. Thanks a lot.
Thank you so much, sir, for the wonderful address. And now I will take this opportunity to invite our honorable guest, Mr. Deepak Parekh, sir, Chairman, Housing Development Finance Corporation, to kindly address the audience.
Past President of the ICAI, Mr. Amarjit Chopra, ICAI members, members of the International Federation of Accountants, good morning to all of you. Today marks the fourth and the final day of the 21st World Congress of Accountants. For India, the World Congress is a momentous occasion, and it's a momentous landmark because it has taken 118 long years for India to host this International Federation of Accountants conference. Yet India could not have been chosen a more opportune time than to host this World Congress. Over the past few years, you've already heard a galaxy of professionals from various walks of life. I'm sure the opportunity to interact with one another and exchange views and ideas on a wide array of subjects and professional issues has been enriching experience. I understand the World Congress of Accountants is held once in every 4 years. And because this body draws upon accounting and finance professionals from across the world, it has rightly earned its title of being called Olympics of the accounting profession. But allow me to take this a bit further. The Olympic motto has recently been amended, and they've added one new word to it, which is together. So the Olympic motto now is faster, higher, stronger, together. The emphasis is on together, which is very important. The Olympic Charter recognizes that we can only go faster, aim higher, and become stronger by standing together in solidarity. Your World Congress, or your vision of the Olympics, also embraces this concept of solidarity. The World Congress theme of building trust and enabling sustainability is so relevant given the current times we live in. As accountancy and finance professionals, you all are gatekeepers of trust and integrity of your respective institutions. At the same time, businesses are transforming at such a rapid pace, and it is critical that finance and accountancy professionals stay abreast of these changes. No institution is completely immune to the vagaries of macroeconomic conditions. So we have to stay in a constant state of learning, and we have to stay in a constant state of awareness. Being future ready is about getting a deeper understanding of the macro changes that are taking place around the globe. Now look at the global ecosystem today. Is entangled in a web of complexity. There are many fractional forces playing out, such as deglobalization, such as trust deficits, rising protectionism, broken supply chains, extreme hyperconnectivity, increases in cyber risks, and risks arising from dodgy crypto assets. So across the globe, we see an economic crisis, a political crisis, a social crisis, a debt crisis, currency crisis, cost of living crisis, and a climate change crisis, and all are playing out simultaneously. It is being said that the world today is in the midst of a polycrisis. It is just not a situation of multiple and interconnected crises, but a situation where the whole is more dangerous than the sum of the parts. Countries are forced to search for reliable partners and more trusted allies, which is now popularly known as friendshoring. Yet some critics believe this may drive a wider divide between nations that are already fraught relationships. Now take, for instance, global growth. Global growth, which was 6.1% last year, is estimated to fall by nearly half to 3.2% in 2022, and is projected to fall further to 2.7% in 2023. So 6.1, 3.2, 2.7, because of all the crises we are going through, the global situation. More than a third of the world economy, more than a third of the global economy will contract, will have negative GDP growth rates this year or next year. While the big three economies, which is US, China, and Europe, will all see negative growths. Global inflation is estimated at 8.5%, 8.8 for the current year, 2022, and is projected to settle down only in 2024 to 4.1%. These are high inflation numbers not seen in the last 40 years. They say that kitchen table is where families tend to discuss pressing issues at home. And for many households globally, the key kitchen table concern remains rising inflation. Inflation is rightly described as the silent thief that eats into the hard-earned incomes of households. Rising fears of global recession and increasing job losses is causing further strain. Now let's look at the central banks around the world. The central banks world over, price stability is critical, which is why we have seen a spate of increases in interest rates. So monetary policy actions are likely to follow higher the longer mantra. This means prolonged high inflation along with aggressive interest rate hikes by most central banks as they endeavor to tighten money supply and restore price stability. So far you've seen many central banks have had to resort to jumbo increases like 75 basis points. You have seen the US Fed increase rates 3 times by 75 basis points. 25 was the norm in the past, 75 is the new norm. And in the US, a slight dip in the latest inflation may prompt the Federal Open Markets Committee, FOMC, to opt this time in December for a smaller increase of say 50 basis points in December, rather than force a fifth increase of 75 basis points. Fortunately for us in India, we've had no jumbo hikes, but have followed a more calibrated increase in interest rates. Now the conundrum for central banks is determining what is better. It's a fine balance between front-loading of interest rates to curb inflation while ensuring that such actions do not end up choking growth. If central banks stop increasing interest rates too early, they risk inflation will go higher. If they overdo the rate increases, it could still stall economic growth. In short, central banks around the world have a very tough role ahead as they try to avoid a hard landing. It's a case of damned if you do and damned if you don't. Now let's talk about India. Against this global background, and which is uncertain, India currently is amongst the very few countries globally that has more tailwinds than headwinds. India is conspicuous exception against negative growth rates. Today we enjoy political stability, vaccine stability and food security. We have maintained excellent relations with most countries and is increasingly holding our turf on the international arena. We do import 85% of our crude oil requirements, but we have diversified the sources of supply from different countries. And we look to import oil at the lowest cost possible and minimize the impact on the trade deficit of our country. Again, in recent period, technological leaps, energy transition, and geopolitical shifts have created new opportunities for the country. We have made huge progress on digitization and financial inclusion. We are as a service-driven economy, we are the back office of the world. And we are now positioning ourselves as a high-end manufacturing hub. There's been huge policy thrust to support India's energy transition, and there are large investments being made in renewable energy, green hydrogen, e-mobility, batteries, fuel cells, solar panels, among several others. Mr. Chopra also spoke about his first point was e-vehicles. Every vehicle in India must be e-vehicles, and we are getting there by the government insisting on auto manufacturers. We are not decoupled from the world, and India will face some slowdown. But there is a consensus that the board that India will still remain amongst the fastest growing large economies in the world. GDP growth rate for 22 may be slightly lower than 7%, but there's no reason for disappointment. What is important to note is the inherent resilience that is now embedded in the Indian economy. I do believe India can grow from a $3.4 trillion today to a $7.5 trillion in the next 5 years. For India, it is the pace of growth that is exciting. I wish I was young as some of the chartered accountants are sitting at the back. You will witness the growth in the next decade or so. Within the next 10 years, a recent research report estimated that India's growing middle class, which is the number of households with more than $35,000 per annum income, would rise 5 times, fivefold, from 5 billion to 25 million in the next 5 years. So the growth of middle class is what is sustaining India. It's the growth of middle class who are the spending class. That will create demand, that will sell more goods, that will show growth. Excuse me. The per capita income, which is today $2,300, is expected to be $5,200 in 2031. Our services as a GDP today is 55%. Services as a percentage of GDP, this is going to grow to 65% in the next 5 years. So by 2031, India could have the third largest stock market with a market cap of $10 trillion. And by 31, we should also be the third largest economy in the world. So we have a lot going for us now. Within the government, there's constant drive to keep the reform momentum going, be it encouraging startups, increasing affordable homes, communicating the rollout of 5G services, raising India's share of renewable energy and e-mobility, and Gati Shakti. I never tired of telling people that in my 50-odd years of working life, I've never ever been so optimistic about our future as I am today. There is a lot more I would like to share with you about the future of India, yet in the interest of time, I would like to shift gears to talk a little bit about the importance of our profession, the accounting profession. The role you play as accounting and financial professionals is critical in instilling confidence to other stakeholders of the company. There is nothing more important than adherence to the time-tested values of honesty, integrity, and transparency. What is wrong, period. Your profession requires you to be meticulous, but more importantly, you need to be fearless, to raise the red flags early in the day. The biggest pitfall one sees is, it's okay since others are doing it. Never get caught up into that. For all the accountants here, and some common sense principles of accounting practices is what you should do, common sense. These should be like commandments of what to do and what not to do. I don't want to list all this, you are all familiar with it. Even globally, much of these carbon accounting methodologies are still evolving. There is also a chasm on climate risk, wherein the environmental scientists don't understand finance well enough, and the finance professionals do not understand the climate issue, the science. Let me give you a simple example. 22 years ago, there was no credit bureau in India. It was State Bank of India, HDFC, and a couple of foreign agencies, Dun & Bradstreet and TransUnion. We launched our first credit bureau in India. At that time, the mindset was no banks will share information on their clients. Today, every bank is a member of it, and no loan is given without going to the credit bureau. The point is that we have to start somewhere, and we are at an inflection point on climate risk. That's the comparison I'm given. So I'm confident that India can play a much more significant role in being key accounting hub to the world. We have a massive talent pool of accounting and financial professionals with deep knowledge, capacity, and we have the drive to stay ahead. Remember, good talent is always commands a premium, and India has plenty of it. and India has plenty of human capital to offer the world. Thank you for having me here today, and it's been a pleasure to share my views.
It was absolutely an honor to hear you, sir. Can we have a big round of applause, please? And as a token of our gratitude and deep appreciation, I would now like to invite our respected CA, Charanjot Singh Nanda, Central Council Member, ICAI, to kindly come up on the dais, please. Let's have a round of applause so that we can have Sir to present a memento to our honorable guest, Mr. Deepak Parekh, sir. Can we have a big round of applause, please? Thank you so much, everyone, with your presence here. And that calls for a group picture and for a bigger round of applause, ladies and gentlemen.